This machine is a lie. The ink, the vaults, the armored trucks, all of it, a decoy. Because out of every $100 you own, a press printed about 3. The other 97 were never printed, never minted. They have never been touched by anyone. Somewhere, right now, new money is being made in complete silence. No machines, no paper, no government, just a blinking cursor and a few taps on a keyboard, and billions appear out of nothing. It is perfectly legal. It happens thousands of times a day. And almost nobody knows who is doing it. So if the government isn't making your money, who is? We're here to ask the simple question behind everything worth anything. Why money? We grow up with a simple picture. The government prints the money. Nearly everyone believes some version of it. And nearly all of it is wrong. The notes in your wallet are real, but they are a thin crust on top of something far bigger. The real money supply lives somewhere else entirely, and it is made by someone else entirely. So follow the trail and catch the maker in the act. Let's start with just how small the cash really is. Take all the money in the United States. Every dollar people can spend or save quickly. Economists call this pile M2. It runs to many trillions. Out of that mountain, how much is actual physical cash? Notes and coins you could hold? Only a thin slice. The rest, the overwhelming majority, exists only as digital deposits, numbers on bank servers. In Britain, the central bank once put it bluntly. Physical cash was about 3% of the total. The rest was just entries in accounts. So when we ask, who makes the money? The cash barely matters. Whores. The real question is, who creates all those digital deposits? Here's the part that trips almost everyone up, including most textbooks. The old story goes like this. You deposit $100, the bank keeps a little, and lends the rest to someone else. Banks in this picture are just middlemen, moving existing money from savers to borrowers. It's a tidy story. It's also not how it works. Banks don't lend out money that's sitting in a drawer. When a bank makes a loan, it doesn't move money from one account to another. It creates brand new money, money that did not exist 1 second before. The loan comes first, the deposit appears because of it. Let me show you exactly how. Imagine you walk into a bank and ask to borrow $10,000 for a car. The bank agrees. Now watch carefully, because this is the whole secret, the thing the printing press was hiding. The bank does not find $10,000 of someone else's savings. It does not move money from another account. It simply opens your account and types in $10,000. That number is new money. It did not exist anywhere in the world the second before you signed. And at the very same moment, the bank writes down something else. At that same instant, the bank writes down that you owe it $10,000. So two things are created together, out of nothing. A deposit you can spend, and a debt, your promise to pay it back. This isn't a trick or a scam. It's basic double-entry bookkeeping. The loan you owe is what the bank counts as its asset. Your new deposit is the matching liability. What it owes you. Add them up, and they balance to zero. Nothing was stolen. Something was simply created. Money and debt, born in the very same keystroke. Here a fair question hits you. If banks can just type money into accounts, what stops them making infinite loans? The answer is limits, but not the one you'd expect. The first is whether people want to borrow, and whether they can pay it back. Reckless loans wipe a bank out when they go bad. The second is the rules. For every batch of new money a bank conjures, regulators force it to put the bank's own money at risk behind it, a cushion of capital. Lend recklessly, and it's that capital that burns first, so no bank can create money without limit. It can make only as much as borrowers will take, and as much as its own cushion can safely carry. So if the high street banks make the everyday money, what does the central bank actually do? Think of it as the bank for the banks. You and I can't keep an account at the central bank, but the ordinary banks can. It issues the physical cash, yes. But more importantly, it runs a separate kind of money called reserves. money that banks use to settle up with each other at the end of each day. That's a different layer from your deposits. Your deposits are made by commercial banks. The reserves between banks are made by the central bank. Two kinds of money, two different creators. Most people never notice the line between them, but it's the line that runs the whole system. If you're enjoying this, a quick subscribe means you won't miss the next one. Now, back to it. Let's make that split concrete because it's the heart of the whole thing. The money you actually use, your salary, your savings, the balance in your banking app, almost all of it was created by commercial banks making loans. The Bank of England spelled this out plainly back in 2014. In the modern economy, the great majority of money is created by commercial banks lending. Not by the central bank and not by the government. The central bank's own money, cash plus reserves, is the smaller base underneath. So picture a pyramid, a narrow foundation of central bank money, and resting on top, far larger, the broad ocean of deposits that private banks have typed into being. But there are moments when the central bank steps in and creates money on a massive scale itself. The clearest example has a clunky name, quantitative easing. Strip away the jargon, and it's simple. In a crisis like 2008 or the pandemic in 2020, it creates brand new reserves, again just by typing them. Then it uses that money to buy financial assets, mostly government bonds, from the banks. The aim is to flood the system with money and push interest rates down. And the goal worked. It kept the economy from seizing up entirely in both crises. But look at the scale of what was created. The central bank's balance sheet, basically a measure of the money it has made, exploded after 2008. Then it exploded again, far harder, in 2020. It reached sizes that would have seemed pure fantasy to a banker just one generation earlier. Trillions upon trillions. And every cent of it conjured the same way as your car loan. Typed into being. Out of nothing. But here's the part that stings the most. When the central bank types those trillions into being, almost none of it lands in an account like yours. It's used to buy bonds. From banks, from giant investment funds, from people who were already wealthy. And what do they do with all that fresh cash? They pour it into stocks, into property, into anything that holds its value. So prices soar exactly where the rich already own, while the number on your paycheck barely moves. The new money is absolutely real. It just tends to reach you last, if it ever reaches you at all. Now zoom out and stack it all together. Commercial banks creating deposits, loan by loan. The central bank creating reserves in every crisis. Put them on one long timeline, and one thing is unmistakable. The total amount of money doesn't hold steady. It grows, and in the modern era, it grows fast. The amount of money in the world today dwarfs what existed just a couple of decades ago. Not because anyone dug up more gold, but because banks kept typing. The mountain of money we saw at the start? It was never a fixed mountain. It's constantly being built, mostly by banks, one keystroke at a time. Here's that growth, drawn out. This is the US money supply, that M2 pile, over the last several decades. For most of it, a steady curve. Then look at 2020. The line lurches upward, climbing in months the way it used to climb in years. Almost none of that was extra cash printed by the government. It was new deposits and reserves, digital money from the banking system. And this is the quiet link to everything else. If the money supply keeps swelling, while the real stuff to buy, cars, houses, groceries, grows far more slowly, something gives. More money chasing the same goods pushes prices up. There's a name for that. We call it inflation. And there's one more twist that follows straight from this. Remember that single car loan? The deposit and the debt were born together, in the same keystroke. That means almost all the money in the economy has a mirror image. Somebody else's debt. Your spendable money is quite literally someone's loan that hasn't been paid back yet. Every dollar in your account began as a promise that someone, somewhere, made to a bank. Which leads to the strangest part of all. When a loan is paid off, that mirror money is canceled against the debt. And both vanish, the exact reverse of how they were born. So the money supply isn't a fixed pile sitting in a vault. It breathes. It expands when banks lend, and shrinks when those loans are repaid. Money and debt are two sides of the same coin. One cannot exist without the other. Wipe out every debt in the world, and you would wipe out almost all the money right along with it. Which is a strange thing to realize about the numbers in your account. They are completely real, but they rest at the very bottom on a promise. So why should any of this matter to you tonight? Because you are part of the machine. The day you sign a mortgage, you don't borrow a pile of someone's savings. The bank types your loan into existence. And in that instant, you personally made new money appear in the world. Most money around you was born exactly that way. And the balance in your account isn't a stack of cash the bank is guarding. It's a promise, an IOU from a private company, that you can have your money when you ask. Your wealth, your salary, your savings, almost all of it is a number a bank agreed to honor, which works beautifully, right up until the day you start to wonder whether they really can. So come back to that machine at the start. The place your money was made wasn't a government press. For most of it, there was no physical place at all. The press really was a decoy. Your money was created by ordinary banks, as loans, as numbers, and it grows, year after year, mostly out of nothing. This isn't a secret or a scandal. It's just how a modern economy runs. On trust, instead of metal. Every node, every balance, every digit on your screen, it holds value only because we all agree to believe it does. We left the anchor of gold behind and built a system where money is created by lending, backed by belief, and tied at the very root to debt. Which leaves a question that should make you a little uneasy. If banks create your money out of thin air, and they only keep a sliver of real cash in reserve, and the balance in your account is just their promise to pay you back, then what happens on the day everyone asks for their money at the same time? Every day you hand a building full of strangers almost everything you own, and you walk away without a second thought, certain you can get it back whenever you like. Most of the time you're right. But why should you be? Why do we trust banks at all? And what happens the day that trust cracks? If you like this one, hit like and subscribe. Got a topic you want us to break down? Drop it in the comments. We're here to answer the simple question behind everything. Why money?